Hello, everyone. My name is William Mucker. I am a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Opportunity During Economic Uncertainty, Why You Should Be Investing in Limited Service Hotels Right Now, with Josh Glass, Vice President of Gentry Mills Capital. I'd also like to thank you, Josh, for joining us today. Before we begin the presentation, I do have a brief disclosure to go through. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we are more than happy to be a part of that dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information if you or anyone that you know who you believe can benefit from the information presented today have any questions about how anything talked about today applies to self-direction or your IRAs, please feel free to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, Josh.
Thanks, Will. I appreciate it. Let me share my screen here real quick. If I can do it. Here it is. Okay, I hope everybody can see that. Okay, thanks, Will. I appreciate the time. I appreciate you having us on Camaplan. Like Will said, I'm Josh Glass. I'm the Vice President of Gentry Mills Capital. So let's just jump into it. If you don't know who Gentry Mills Capital is, we are a privately held, family-owned real estate investment firm, and we're right here out of Dallas, Texas. And like I said, we're family-owned. My father, Billy Glass, started this company back in 2006. And we've just been putting together single asset offerings. Sometimes we do, we put 2 or 3 different assets in an offering, but for the most part, what we specialize in is single asset hospitality offerings in the limited service sector. So, and if you go back and look at our history, we've been very successful in the past. We've done 17 full cycle programs, which means that you invest, you get distributions for 3 to 5 years, and then we've sold that property 17 times and given you your capital back and all your profits. So we average in the mid-teen type rates of return if you just go and average all of our programs from the past. We've raised over $250 million since 2006. We have high quality investment opportunities, and our customer service, I think, if you invested with us, you will find that it is the best around. We have Ashley Beard, who's on this phone call, Paul Nicolini. We've got an investor relations lady, Donna Bradle, that, if you have any questions, we would be happy to answer any of them. You just pick up the phone and call us. You're going to get me, my dad, Ashley, Donna, and we'll get back to you within the hour, if not within a few minutes. So we really pride ourselves on customer service. We get, we have a portal that you can log on to and get your K1s, which we get out on time every year. You can get your distribution notices, you can get your newsletters, etc. So we really pride ourselves on that. And I think if you invested with us, that you would see that. Moving on. So now, this is the main portion of the presentation today. Why invest in limited service hotels and why now? And so we've got 5 reasons here that we think you should be investing in limited service hotels and now. So we're living in a crazy world right now. All this inflation, everything that's going on, the prices of rooms are going way up. So if you just go back in history, real estate's always been a hedge against inflation. I mean, people, when the market goes down, what do? They're losing all the money in the stock market. So they go put all their money in hard assets. And it's really helped people through the years and downturns. And so we feel like with this inflation going on right now and the stock market going down, if you put your money in hard assets like ours, like these limited service hotels that we're investing in, then your money's pretty safe. And we think that, you know, when you come out of it on the other side, that you're going to make a big profit. So, and the reason the ways we do that is that we raise the rates during inflation. And you know, we have the flexibility. The reason we love hotels is because we have the flexibility to lower and raise our rates at any given day. We're not like multifamily or office where you can only raise the rates, you know, every year. In the hospitality industry, we can raise the rates every day, every hour, depending on what's going on in the market. So we really love that. Number two, attractive cost basis. So right now we're finding, you know, really good acquisitions on these hotels. We just went through the pandemic, okay? A lot of these owners are, you know, really at their wits' end because they went through the pandemic and, you know, they had to feed these hotels. They got all the PPP loans from the government, but this COVID thing kind of extended, especially up in the Northeast where, you know, some of these cities were shut down for long periods of time. And so these owners just were at their wits' end. And so what we did is we went in and we said, hey, you know, we'll buy your hotel and get you out of this situation, but, you know, it's going to be at a discount. So what we're doing is we're buying hotels at cents on the dollar. And so we're getting really good value, and you know, and what it's going to do is we're going to be able to hold it and enjoy the cash flow of the property, and then sell it at a really good price down the road about 3 to 5 years. Number three, long-term stability. So, you know, these hotels, especially in the limited service, you know, limited service hotels in the pandemic outperformed full service hotels. Because why? Because full service hotels, they have this huge, you know, all these employees and all this overhead to run their hotels. They have a full kitchen. They have, you know, 100 people on staff. And, you know, limited service hotels, you know, we have heat meet type stuff. You know, we have very little employees, 10 to 20 employees a property, sometimes maybe 30 if it's a bigger property. But, you know, there's not much to do. It's just a lean and mean type business model in the limited service hotels. And we love that. And so that's why we're very successful. And when we manage them correctly, which is what we do, our margins go through the roof. Number four, robust demand. So demand growth is outpacing supply growth by more than 3 times right now. So the reason for that is because there's no hotels being built right now, because the cost of building something is crazy. So there's not a lot of new competitors coming in the market. And so demand is going crazy, especially now that everybody's out traveling. And, you know, they were just cooped up inside for, you know, the last 2 years. So now everybody's out, you know, traveling. They made their plans, you know, 6 months ago. Now they're out enjoying the world again. So it is great. So demand is outpacing the growth right now. And then number 5, recovery. So, you know, we're back to over 2019 numbers right now. So, I mean, you know, 2019 was a great year in the hotel space. And then 2020, it just went, you know, just downhill real fast. And it's kind of slowly come up. And then here in 2022, it's just taken off. And so we're getting huge rates. A lot of travel is going on, and it is outpacing 2019, which is great to see. So moving on, we just talked about how, you know, the revenues, or, you know, how 2022 is killing 2019. And so there's all kinds of, you know, data on this, and I can show it to you. I mean, so if you come over here, so you can see right here in 2019, you've got, you know, the average occupancy across the board on all different scales of the hospitality industry was 66% at $130 with the RevPAR $86. We kind of specialize in this upscale and upper mid-scale portion. And, you know, that was 69% at $128. And, you know, you can see now in 2022, it's up 64%, $135 and 87 RevPAR. So and if you would look at our portfolio currently, just across the board, we're averaging way better numbers than this. So this is just this is just general numbers. And this is from, you know, the Newmark Newmark source with the Star Report data on it. So, and there's a lot more data that we can back up on that, but we are outpacing 2019 numbers in a major way, especially in our portfolio, and you can see across the country as well. So today, we are going to talk about our current offering, which is a Hilton Garden Inn in Dobbs Ferry, New York. And this hotel was built in 2018. It's 143 rooms. And I don't know if you know where Dobbs Ferry, New York is or have ever been there, but if you just were looking at Manhattan, you can see Manhattan down here on the bottom middle of the presentation. And you just ride up the Hudson River right here. You can see Dobbs Ferry. It's about 15 miles north of Manhattan, which is if you've been to this area, it is where all the country clubs are. It's the number one, it's the, most populated suburb in Manhattan, and there's a lot of people there. There's a lot going on. But the reason we bought this hotel is because, it was the previous owner built this property in 2018. And he was like, oh man, we're having a good time here. 2019 comes, they're doing great. 2019 comes, they're doing great. And then, here comes 2020. They shut down the entire city. They shut down everything around it. And so this property suffered, and it's a brand new asset. And so this property it ran about 30 to 40% occupancy in 2020, and then it went up to about 60% occupancy in 2021, and then it's just really taken off in 2022. And so this owner just was at his wit's end because he had to feed this property through COVID to get it through it. And so he was just ready to get out. And so we kind of knew this guy from previous acquisitions that we've done and in the area, and he just called us and we made a deal. And so we feel like we're in at a very low basis. We're in at $250,000 a key, which the comps in 2019 in the area were well over $300,000 a key. And if you were to build this asset right now, it'd be at least $350,000 a key. So when I say a key, that means per room. And so we feel like we're in at 65 cents on the dollar, and the property is cash flowing like crazy. It's currently running 90% occupancy and at almost a $200 rate. Okay, and so it's doing very well and cash flowing like crazy. And let's keep going through the slides. So here's the summary of the offering. It's a limited partnership interest in a Hilton Garden Inn by Hilton that was built in 2018. We're raising $8,829,000. The minimum investment is $20,000. The holding period on this is 3 to 5 years. When you get your taxes at the end of the day, it's going to be a K1 income, and which is great if you do a cash investment in this, then you will get tons of tax benefits. So we just say you invested $100,000, you're going to get about $30,000 to $50,000 in K1 write-off in the first year, and then it'll be about $10,000 to $20,000 every year after that until we sell the asset. So you're really going to enjoy a lot of cash flow here and a lot of tax benefits, which is a great thing if you need tax write-offs and you have a lot of passive income in your portfolio. This is for accredited investors only. The distributions, we say we're going to do 8% quarterly distributions every year, 8% annualized and we pay on a quarterly basis, which is 2% a quarter. Okay, so if you put $100,000 in, that's $2,000 a quarter. But look, we think this thing's cash flowing so well, we think we're going to pay well above the 8%. We think we're going to do 3 to 4% a quarter. Okay, so we think it's going to be 12 in the range of 12 to 16 a year that this thing's going to cash flow. So we're really excited about that. And so when you get the cash flow like that, you get a lot of tax benefits as well. Just some property information on it. It's an upscale limited service hotel. I think everybody's probably been in a Hilton Garden Inn. This hotel is built out very well, as you can see by the pictures. It stays very busy. This is in an older area, so obviously New York, just North Manhattan, it's all very old. So the average hotel in this area is 22 years older than this one. Okay, So we kind of gobble up all that business in the area just because we're a newer hotel on the block and we're a Hilton. And so we kind of get all the business from people that are used to going to the older hotels in the area. So property is 143 rooms. It was opened in 2018. It's 4 floors. It's got a covered garage. It's in this retail village, kind of a town square village. And so we share a covered parking garage that's actually attached to the hotel. And we share it with all the other, it's like an HOA that is paid by all the tenants in that retail village. So we really love that. It makes it nice for the guests that come and stay. We've got an on-site restaurant that's very little heat and eat type stuff. You've got an on-site bar, which is huge. We get a lot of bar revenue out there. There's a very large bar in the lobby. And so we love that. You get limited room service. There's nice, 24/7 fitness center and a lot of other amenities. And so let's keep moving here. So this is kind of a better map of what's going on in the area. All those orange stars, those are golf courses. So this is a big golf course area, and then you can see all the other room night generators in the area. You've got hospitals everywhere. You've got Lionsgate Studio that they're building a massive extension onto that. You've got the House of Sports, which is a huge sports complex where we get youth events coming in there all summer, all spring, summer, and fall. And that is a big room night generator for us. But look, we love this area because it's just dense with people. There's 20 million people in New York and surrounding areas. And so, you got a lot of traffic, and we're kind of the newest Hilton on the block. And so we're getting a lot of traffic right now. 90% occupancy at $197. So we love that. If you look, here's some more about the market information. You've got, we kind of list all these things, and you can go through these if you'd like, because I'm sure this is going to be a recording. And we can obviously give you some more information that we've done in depth. But a lot of hospitals in the area. We talked about Lionsgate Studio, the event areas that bring a lot of room nights. The House of Sports, 19 golf courses within a 21-mile radius. You got it's located in the Riverstown Square, which is just a brand new, this whole thing was built in 2018 along with a hotel. And so it's right on the highway and, right on the Hudson River. It's close to Tarrytown, which is just north, and which is kind of a place where a lot of the locals like to go. There's just a lot of corporate room night generators. You got tons of companies in the area. And this area is growing very well. And Westchester County is the second wealthiest county in New York, which is behind, Manhattan. So it's just a great place to be in. It's fantastic real estate. So how do you benefit? Well, you're in at a low cost. Your cost basis is $250,000 a key, all in with all the costs that are associated with this acquisition. And if you were to replace it today, it'd be well over $300,000 a key. And there's comps from 2019 that are well over 300,000 keys. So we feel very comfortable where our cost basis is. There's a low minimum investment of $20,000. The short hold time of 3 to 5 years. Look, typically we would go in and we would do a renovation to an asset like this. Typically, when we buy an asset, we have to create value in some way. And so typically we do a renovation and a large renovation, and and we'll spend $3 to $5 million. But on this one, there's no renovation required. And so we feel like we're going to be able to sell it closer to the 3-year mark because we don't have to do any work to it. All we have to do is manage this property correctly, and then we can flip it, sell it really quick. So this was just a buy coming out of COVID, and it's just a great opportunity. So short hold time, immediate income. So if you were to invest right now, your first distribution would be on January 15th because it's immediate cash flow. It's an existing hotel, and your distributions come directly from the cash flow of this asset. Tax depreciation, we talked about it earlier. We feel on this, you're going to get a K1 tax form, which, like I said, if you invest $100,000 in April of 2023, you're going to get a K1 with $30,000 to $50,000 of K1 depreciation, which is a tax benefit. And so And the way we do that is we do it through a cost segregation study. So we get our CPA firm, they come in, they go through the whole asset, and they, go and they say we can write off these certain things at a certain schedule. And so, in commercial real estate, you can write off the building, which is 75% of the write-offs, and that's at a 37.5% write-off. 37.5 year write-off, sorry. And then 25% of the stuff you write off is the furniture, fixtures, and equipment, which is everything inside the hotel, the chairs, the computers, the tables, the beds. And you can write that off on a much shorter schedule, 3 to 7 year schedule, which that's where most of the depreciation comes from. So we maximize that with a cost segregation study, and it comes out to where we have tons of tax benefits at the end of the day, which I think you'll enjoy. We do frequent communications, monthly and quarterly updates. We have a great marketing and communications girl here. She's a straight professional. She does monthly communications, which I'll show you here at the end of the presentation, which shows our entire portfolio and your specific investment and how it's doing, and just a quick update on it monthly, which we email out. And then there's a quarterly updates, which is an actual newsletter that is specific to your investment. If you were to invest in this Hilton Garden Inn, and shows you exactly what we've done, how we're managing the property, what we're doing to bring business to the property, etc. So Ashley Beard, she does all that, and she's very good, and you'll get to know her if you invest with us. So how else does this benefit you? The strong historical performance of this property and quality brand recognition. So Hilton Garden Inns generally just have done very well across the board. We love Hilton Garden Inns. We have many of them in our portfolio and other offerings that we put together, and we've done very well. And so we really like Hilton. It's obviously a quality brand. Marriott and Hilton are the top brands, and but this hotel was built out very well, even overbuilt in some cases, which we really like. So if you were to go and see this asset, you'd be like, wow, that's a really nice asset. It's built out very well. And then another benefit is that it's in proximity to numerous room night generators, hospital, colleges, corporate training programs, etc. We went over all that. So you can invest 2 different ways. Obviously, you can do it through qualified funds, which is your IRA or your Roth IRA or 401k, and you just get the quarterly income and enjoy the cash flow. And then obviously you can do it through your personal funds. You can just a cash investment, which is, typically a little bit better if you have a lot of passive income, because, you get the tax benefits as well. You get the tax benefits on qualified funds, but it's just not as good as, it's not even near as good as the cash investment. So love to answer questions on that. If you have any questions, just please feel free to call me or text me or email me. I'd love to chat with you about that. But I talked about this earlier, distributions begin immediately. And then, so this is a newsletter we kind of put out. We had a sale that occurred this year where we had an element by Weston, which is a Marriott product in Palmdale, California. We just sold it this year, and we brought this asset through COVID. It just did really well, and we made everybody a 16% annualized rate of return on a 5.9 year hold, which was a little longer than the 5 years that we anticipated, but we went through COVID. So anyway, we doubled everybody's money on this investment, and this is just our 17th full cycle program that sold this year in 2022. Here's the monthly update that I was talking about that Ashley Beard puts together. This is it's just, you'll get this every month. You can kind of see how your property is doing. If you go down, you see it, the top right, hotel occupancy and average daily rate. We list these are all the hotels that are in our portfolio. And you can see GMI Dobbs Ferry LP at the bottom is what we're talking about today. You can see the current occupancy and rates that it's been doing for the last 3 months. So, I mean, it's done very well. And then you can see how we put our portfolio against all the hotels generally that I showed earlier across the board. So I think it was at 66%, and we're at 77%. and at a much higher rate, $154. So we're averaging better than those reports that I showed you earlier. But this is the monthly update, and then here's the quarterly update. This will be more specific to your investment. So if you invest in GMI Dobbs Ferry, then now it would say that on this report, and then you would have, all the details about this particular investment and what we're doing to make it better and have stronger performance. And then that's my father, Billy Glass, who writes these. Well, actually, Ashley writes them, but Dad blesses them. So, Ashley does a lot of work around here. But that's the end of the presentation. If you have any questions, you can contact my father, Billy Glass, who started this company, me, Josh Glass, or Ashley Beard, and anybody in our office. Obviously, Paul Nicolini's on the call as well. So we'd love to chat with any of y'all, and we appreciate the time, Will. And if you have any questions that you want to talk about right now, then I'd be happy to talk about them.
Perfect. Thanks for the presentation, Josh. I'm trying to think of any questions right now, but it seems like you covered so much and so thoroughly that I can't think of anything. You mentioned IRAs, you mentioned your offerings and the benefits of investing into hotels right now. And one more time for people that might be watching this recording in the future who do have questions, one more time, where can they find you?
So you can find us on our website at gentrymillscapital.com, and all of our information is on there. You can see everything that we've done in the past and what we're working on now. And then obviously you can call me. My information's on our website. You can call my father, Billy Glass. You can call Ashley Beard, who's on this webinar right now, or you can call Paul Nicolini, and all of our information's on our website. So, and then obviously you can probably get it from Will as well, from Camoplan. And so we look forward to hearing from you guys and appreciate the time, and hopefully we'll be talking to you soon.
I appreciate it. I appreciate the presentation from you and the team at Gentry Mills, and I hope everybody attending has a great rest of their evening or their day.
All right. Thanks, Will.